Welcome back, Milwaukee. Marcus here with the latest real estate market update. So if you're anything like me, then you were probably thinking or hoping that after the crazy year of 2020, things will go back to a more, normal market environment. And I've certainly been hoping that for 2021, but it doesn't look like it. It becomes more and more apparent to me that 2020 was not an outlier in terms of what we've seen in the real estate market. When you look at the data of the last 3 years now, then it's becoming very clear that we're looking at a trend here. 1 year you can chalk off as an outlier, so which is what I basically did with 2020. But now it's becoming very obvious that the Milwaukee real estate market is changing in a very major way. In the next 10-15 minutes, I'm going to show you some data, and then you be the judge when you have all the information. It's most obvious actually when you go to an open house right now, and you might be thinking I'm kidding with that picture, and I'm actually half serious with this. So this is what it feels like when you pull up to an open house. You're thinking, what the heck is going on here? And it used to be that when you had an average open house, there would be 3 or 4 parties stopping by over the course of an hour or two. And if you go to an open house right now, if it's attractive, it's just packed with people. That is not what we have seen, and this is one very obvious indicator on how the market has changed in the last 2 or 3 years. But let's take a look at some data here. So this is single-family sales from January from MLS. And we're comparing with the January of last year, so we have some sense of a change. And you can see the supply side here, so single-family homes for sale are at a minus 38%. So we just have a lot fewer houses to sell as we had last year. At the same time, we sold 1,513 houses, so we sold about 4.5% more than we did in the previous year. And if you've been following my videos, then you know that throughout last year, we've seen prices creep up some more. And we are still looking here at 11.46% increase in price. Pretty much the same picture when you break it down for Milwaukee County or when you break it down for Ozaukee County. But it becomes very apparent. I'm going to pull in some data here from last year. So this is a January from last year comparison with January 2019, 3 years ago. And when you look here, we always had about 4,800, 5,000 homes for sale in January. So this puts things in perspective because this number always has been very, very stable. And being at minus 30% inventory is a complete outlier. But even with much less inventory, you can see that we have sold more homes this year than we've sold last year, and we've sold in the previous year, by the way, in 2019. So you can see the trend here. The market is continuously accelerating and gaining speed. And with that, you can also see what's happening here with the pricing. So we had a strong increase in January 2020. Remind you, this was before COVID. So things were still good in January of 2020. And we have seen a strong increase here, and now we're seeing the same thing here. So we can't really chalk this off anymore as just a COVID-related issue. I think COVID is still dampening the supply side because a lot of people are not putting the house on the market because they don't want to have 50 people come through on an open house and leave their germs everywhere. So some people are more relaxed, others are a little bit more concerned about these things, and that's certainly for a percentage of potential home sellers that they're holding back. But at the same time, you have to think about it this way. If they're selling their home, they're also becoming buyers because they need to move somewhere. So what is really happening here is that millennials are coming into the market. The oldest millennials are now 38 years old, and they have changed their mind and their attitude about buying a house. They're actually interested in buying houses now, and we will see that it's been becoming apparent in the last 2 years, but we will see this trend going on and becoming stronger because we have so many millennials. At the same time, our older generations are living longer and healthier, so the houses are just not becoming vacant at the rate that we used to have. And the issue that we have in Milwaukee in the metro area is that inventory is just very much limited to what we have. We don't have a whole lot of new construction going on. I mean, it's quite a bit, but it's only in the hundreds and not where we need it to be. So where is all that demand going? We are seeing signs of gentrification in Milwaukee. So when you look at the areas between West Allis and Wauwatosa, for example, that's going up in pricing. The Milwaukee parts that are north and northeast of Wauwatosa, if you look at River West at Bayview, for example, and see what's happening there with prices. So we're clearly, seeing early signs of gentrification here, because there's just not enough inventory out there. So, people are looking for buying opportunities. All right, so how do we break this down when we look into the luxury segment, which, mind you, is only 7% of the market? That is the segment over $700,000. We're seeing that this segment is still fairly untouched. So prices are more or less flat. So, I wouldn't pay too much emphasis on the minus 1.2% here, because on these large numbers, it's basically flat. But what's significant here is that people are not negotiating as much anymore as they used to. So we used to have, over 9% negotiation on average. And now this has changed significantly, with the negotiation power that buyers have. So more and more of these luxury homes are selling very close to or at list price. When we look at the middle segment, which is the 350 to 700, which makes up a much bigger share, 21% of the inventory, then we are seeing here that prices have gone up actually quite a bit, 4.5% on average. That is on median, that is significant. And also here you see the same trend. Less negotiations, more houses are selling at or over full asking price. So whenever you see that number going up into the high 90s, that means that a lot of the more attractive listings are selling at over 100%, because this is the average here. And then, of course, the majority of the market in the greater Milwaukee area, southeast Wisconsin, is under $350,000. So we have a lot of $200,000 to $300,000 listings. And when you look at that market, that is the one that sees the strongest increase in price, also price per square foot. And of course, also this market is tightening, and a lot of homes are selling over asking price in this segment as well. So we're getting close on average to 100% here. Now, here's an interesting observation. I see a lot of people that are selling in the entry level below 350 segment, and they are becoming buyers in the middle segment. So they are upgrading to a bigger home. Maybe they're looking for more space to work from home. Maybe they're looking for a finished basement, for a bigger yard, for the family to hang out. So they're upgrading. Usually they're stepping up into the next segment. And we have seen that middle segment becoming more competitive last year. We have not seen that pressure yet arrive into the luxury segment, but it's cascading, through the segments, and it will be interesting to see how long it takes before we see prices go up also on the top end in the luxury segment. If you're interested in that type of information, I suggest you consider subscribing to my YouTube channel. I'm putting out fresh videos every week, and I'm trying to answer very common questions that you might have about the Milwaukee real estate market. So if it's about house hacking with the duplex, or how do I really know how much my home is worth, how much equity have I gained, is new construction worth it? So I'm examining these questions, and I put videos out every week. So if you're interested in that information, then I would be very excited if you become one of my subscribers. And of course, don't forget to give this video a thumbs up if you like it. All right, back to our statistics here. So let's take a quick look with what's going on with the buyer traffic. So we have very good data from showing time here, and you can see the amount of showings that we had over the last 2 years. So the blue lines are 2019 and 2020. Here you can see the first lockdown, and then buyers came back very, very strong, even exceeding the previous year. And here in orange, we have the beginning of this year, and no surprise, we're off to a strong start. And you can see that also in the weekly sales absorption. So not to kill you too much with data here, but I've never seen a sales absorption going into the teens. So, being at 12% weekly sales absorption is just completely unheard of, and speaks to the velocity that we currently see in the market. So what's going to happen with US home prices across the board? Experts and the big institutionals are thinking that we're going to see an increase this year. average of all 7 here is about 5%. That is certainly possible for Milwaukee. I would think that we are going to see in the below 350 in the entry level segment, we're going to see even more than that. We're probably going to see around 5% in the middle segment. But this national average also considers markets that are very hard hit by COVID and that are under price pressure, both on the East Coast and on the West Coast. We're seeing a lot of people, for example, moving out of San Francisco because they're able now to work from home, and there is no reason anymore for them to pay the extremely high San Francisco real estate prices if they can just move to Milwaukee, for example, and live here on a much lower monthly expense. All right, U.S. sales forecasts are expected to be up this year, so we have more and more players come into the market, and everybody seems to agree that we are going to see about 6 to 7 million homes sold this year, so that's a fairly strong number. The question that I have is, where's all that inventory coming from? We just don't have the houses. Now, the other question, when you look at prices going up like this, you can't help yourself then ask, are we going to head into a bubble? Is this bringing back memories from 2007 and 2008? And that's a question that I really would like to examine here in the next minutes. And let me start out with this here. So there's a lot of information on YouTube and on social media that's talking about the next housing crash. I don't see it coming. I don't see it in the data. And here's 4 reasons why we are definitely not heading into a housing bubble. And keep in mind, that's not only my personal opinion. I draw a lot of my data and my information from very well-recognized research institutions that are consulting big banks, etc. So I see it on a local level, but it also lines up with other experts are saying. So the first thing here is this time the housing supply is extremely limited. When you look back into 2006, 2007, you could already see before the crash that inventory was building up a huge overhang. So you would have houses sit on the market for half a year, for 9 months, new construction, before they would sell, because there's just so many of them out there. So we have limited supply, but also this time the demand is real. So in 2006 and 2007, we have seen a lot of speculative demand. People would buy houses, hope the value would go up, and they would be vacant. Nobody would be living in them. This time the demand is driven by a demographic shift. We are seeing millennials becoming home buyers. The oldest millennials are now, like I said, 38 years old. They're getting married, they're having kids. Both life events are known to be triggers for buying your first home. You're done renting in an apartment. You have a family now and wife and kids, and you're looking for your own home. So millennials are doing this now. They've started about 2 years ago. And that is a wave that is just beginning, and this is where a lot of the demand is coming from. So the demand is definitely real. The other thing is that going back to 2007, 2008, we have seen a lot of people using their houses as ATMs. So they refinanced, took money out, paid on their credit cards, do all sorts of nonsense. And of course, this is what got us in trouble. As a nation, we had a very slim equity share. And now people are a lot more conservative. We see a very low utilization rate on home equity lines. People have home equity lines, but they're not using them, and they're certainly not using them to pay off credit cards. We have very good data. And also this time home prices are still very affordable. So that has to do with 2 factors: that wages have gone up over the last decade, and interest rates are low. So between those 2 things, that makes home prices very affordable. And the next few slides, I'm going to take you through that and show you the data that is supporting these points here. So here's a look at national inventory. In a balanced market, we have about 6 months worth of inventory. You have to go back to about 2015 to have a balanced inventory. And we've been slowly but surely, decreasing inventory that's available. Right now we are at 1.9 month worth of inventory as a nation. So that means if we're getting no more listings, then in 1.9 months we have basically sold everything that we have on the market. So this is a crazy low level on a national level, and it lines up perfectly with Milwaukee. Actually, I would say we're even tighter on inventory because we're down to less than 1 month worth of supply. So we have just a very a dry market. There's not much on the shelf. So where's the demand coming from? The answer is that we're seeing a shift in demographic segments. So you have here the major generations that make up the 331 millions that we are in America, and you have the youngest ones here, Generation Z. Those are 0 to 20 years old. So those will become home buyers at some point. But who's buying homes right now are the millennials. They're 25% of the population. They're the largest share in the workforce. They are in their home buying years. Kids, wife, they are coming into the market, and we're only seeing the beginning here. So it's only the older millennials that are flooding into the market right now. There is going to be more demand. We have in the Milwaukee area, we have about 1.6 million people in the metro area, about 300,000 millennials. If they all get married, that's 150,000 couples. And we're looking at a market that sells about 8,500, 9,000 houses. So you can see how disproportionate the supply and demand side is. On the other hand, we have here the silent generation. Those are 74 to 91 years old. And we have the baby boomers, 55 to 73. And both generations live healthier, fortunately, and longer. So their homes are not becoming vacant. That is supply that we're missing in the market. That is not coming because they are, living for another 5-10 years than they used to decades ago. And that is another reason why we're seeing choking supply. So we're really caught between that unexpected increase in demand that's coming from the millennials, relatively sudden, and that shortage of supply because we're not getting these homes vacant. The Gen X, which is my generation, if we're selling a house, we're buying a house. So that's a wash. That's a net zero. There is no gain there. So it's really happening here between the millennials and the baby boomers and the silent generation. And so we have a demographic shift that's happening in the marketplace, but we also have another thing that's going on that's driving the market. We have a lot more people working from home than we have seen in previous years. And that is changing the needs that people have on their homes. If you're working from home, you need a dedicated office space. If both parents are working from home, then you need 2 home offices. So with that, we're seeing a trend for larger homes again. And then also, where the kids going, meanwhile, so a finished basement comes in handy. So all in all, the demand on home sizes is increasing, which is also fueling that demand in that middle segment, $350,000 to $700,000, because that's where the bigger homes are at, and this is what people are looking for. Now, next, let's talk about equity. So as I mentioned previously, we have a lot healthier equity situation. This is percentage of equity across the US from 2020. So we have a very small piece of homeowners that have less than 20% equity. So that is a massive equity cushion. And the good news is that people are not using it foolishly as an ATM. We're seeing relatively low utilization on home equity lines across the nation. So there is equity. And the other good thing about this is I spoke in the last month videos a lot about forbearance programs. So people that are in forbearance and cannot find their way out financially of this situation, foreclosure is really not the first option for them. They have so much equity in their homes that they can just put their home on the market, walk away with the paycheck, and avoid foreclosure. It's a very easy solution for them to just sell their home. So speaking of equity and cost of home ownership, let's take a look on affordability. So what you can see here is how much of an average income in the US do you need for a mortgage payment? The historic norm here is 21.2%. We know that buying a home is cheaper than renting. Rents are relatively high, so that is making buying a home attractive. Here you have, if percentage is little not so tangible, here you have actual mortgage payment numbers with about $826 a month for a typical mortgage payment. Now this does not include property taxes and insurance, so you'll have to pack it on top of that. So you might be looking at $1,400-1,500. This is still very affordable for a family. Compare this with June 2006 here. So you can clearly see how 2006 mortgage payments were higher. Now we have lower interest rates and we have higher wages than we had back then. So from that point of view, home prices have a lot of room to grow because consumers have they're not stretched with what they're spending on housing. We have more people relocating to Milwaukee, and I want to quickly touch on this one because Milwaukee is very affordable. Here you have a list from Kiplinger that is showing the top 100 metro areas. Here you have California, San Jose, San Francisco home prices. You can see what's going on there. Madison Affordability Index is on a 7. Milwaukee Affordability Index is on a 3. So that's the reason why we're seeing more and more people relocating to the Milwaukee market, because you have that income to home price ratio that is very favorable and that really allows people to buy quite a nice house for their income on average. Now let's talk a little bit about new construction. So that's the other piece of the bubble, and here you have housing starts from the 1960s all the way to now. And people who are looking at the last 4 or 5 years might be saying, okay, homes, they're building so many new homes, most of them in the south. Almost 60% of new home construction are happening in the southern states. The Midwest only makes up for about 15%, 16% I think it was. So we don't have that much new home construction. But what's my point here is that of course builders crashed and burned in the wake of 2007. So there were many of them went out of business and had to went bankrupt. And slowly new home construction is coming back. But you can see here that we hit a low of under 500,000 homes in a year. And slowly we're working our way up. We're getting now back to 1.5 million. The population has changed from 168 million to 331 million. And we have created a supply gap here because for about 10 years here in this time period, we have not produced enough homes. So the fact that we are back at about average does not mean that we have filled up that hole that we have dug ourselves in the last 10 years. So on a national level, there is a huge hole in new housing supply that builders will have to fill up in the 10 years. And that is why builders are so optimistic and so motivated at the moment. But they're also in a tough spot. And I'll just pick one out of here, which are the lumber prices. So historically speaking, back to the 80s, we have seen lumber always be around $300-400. And in 2017, we started putting import tariffs on Canadian lumber. That didn't really help us. So lumber prices started shooting up with the import tariffs. And in the last 2 years, we have just been caught in that supply and demand discrepancy, where lumber prices have literally, tripled. We're now getting close to $1,000, and that is something that we have historically never seen. So, and in a large home, this can be $50,000 more in lumber. Homes are built, as you know, mostly from lumber. So that means we can expect new construction homes to, keep increasing in price. And that is also not helping with the upwards trend that we're seeing on home pricing. It's just the cost of material that's driving up. What's going on with interest rates? So we're seeing a change also here. If you followed my monthly market updates, you've seen in the last months that we always have been, predicting a flat line, and now we're predicting actually a slight increase in mortgage rates. So we are now in below 3%, 2.7, 2.8, the typical rates for a 30-year fixed. And it looks like towards the end of this year and then into next year, we're going to see a slight increase in rates, which of course will have a negative effect on affordability. So that might actually slow down the way how home prices are increasing, because with you have the double effect. Now the homes are more expensive and the interest rates are higher. So in combination, that might slow down the price appreciation. Here you have it broken down by the individual estimates, Freddie Mac, Fannie Mae, MBA, and NAR, and the averages of all four. So by the end of 21, they're expecting about 0.4 percentage points higher, and then a year later, again a little bit higher. But in the grand scheme of things, historic averages being between 6 and 7%, these are still crazy low interest rates. So with all that, what can we expect for the greater Milwaukee area for spring? First of all, we are going to see more and more millennials come into that market, and they are going to drive that below $350,000 price segment really hard. Attractive homes will continue to sell extremely competitive, and we're going to see offers that are, well above asking price. A few years ago, when I told somebody that this home might sell $2,000 or $3,000 above asking price, people would say, "Oh my God, that's like California." And today we're wishing that attractive homes would only sell $2,000 or $3,000 over asking price. So more inventory hopefully is going to come on the market in later in spring, in March and April. We've seen it already in the last couple of weeks. Several of my buyers have made comments. And I have, let me see, 7, 8 sellers that are, getting ready, in the process of getting the house ready. So it always takes a few weeks. And so hopefully we're going to see more inventory coming up in March and April. Sellers have been missing that early bird opportunity. We had, just nothing on the market in the last weeks, and that is slowly starting changing. So, it's still going to be a very tight market going into spring, but every month that we're, going forward, it's going to be less and less inventory. And for some people, a good scenario is to sell their home now. It's going to take about a month to, 2 weeks to get it on the market, get it sold, get it closed about 30 to 45 days later. If you want to, you can ask for a longer closing timeline. Meanwhile, you're looking and you're buying into the spring market. One thing that you have to consider, the market that you're buying is also the market that you're selling, or the other way around, the market that you're selling is the market you're buying. So if you're selling your home for a price that is a lot more than you might have expected a couple of years ago, keep in mind that you will need that money because you're also buying into a market that is higher. The benefit is maybe if you're upgrading into a more expensive segment, then you are selling in a market that is more competitive and you're buying in a market that is less competitive, or at least less competitive yet. Medium price points will start to medium price points will continue to appreciate. So that's that middle segment. We are still waiting to see how that is going to affect the luxury segment. That is not too affected at the moment, as you've seen. And new construction remains a very limited factor in the greater Milwaukee area. We're building several hundred homes every year, but they're all in the 500, 700 and above price ranges. So that doesn't really help with the housing supply where we need it. Well, with that, thank you very much for watching. I hope you got some good information out of this. As you have seen, there's a lot more information to specific topics on my YouTube channel. So if that's interesting to you, I encourage you reach out and check out my channel and subscribe. And I will see you soon.